Home office deduction rules for business owners. With more entrepreneurs and small business owners working remotely, the home office deduction has become one of the most valuable tax breaks. If you use part of your home for business, you may be able to deduct certain expenses, reducing your taxable income. However, the IRS has specific rules, and it's important to understand them before claiming this deduction. Who qualifies for the home office deduction? The home office deduction is available to self-employed individuals, freelancers, and small business owners who regularly and exclusively use part of their home for business. Employees working from home generally do not qualify unless they are self-employed. To qualify, your home office must meet two key tests. 1. Exclusive use. The space must be used only for business. A guest room or family living area that doubles as a workspace does not qualify. 2. Regular use. You must use the space consistently for work, not occasionally. What counts as a home office? Your home office doesn't need to be a separate room. It could be a section of a room as long as it meets the IRS requirements. Acceptable spaces include a dedicated office or spare room, a converted garage, basement, or studio, a designated corner of a room used only for business. 2 ways to calculate the deduction. 1. Simplified option. You can deduct $5 per square foot of your home office, up to 300 square feet. The maximum deduction using this method is $1,500 per year. This method is simple and doesn't require detailed record keeping. 2. Regular actual expense method. You calculate the percentage of your home used for business. For example, if your office is 200 SQFT in a 2000 SQFT home, that's 10%. You can deduct that percentage of qualifying home expenses such as rent or mortgage interest, utilities, electricity, internet, gas, water, insurance repairs, and maintenance depreciation for homeowners. Expenses. You cannot deduct personal expenses unrelated to your business. Costs for areas of your home not used for work. Improvements that benefit your entire home unless you prorate the business percentage. Record keeping is key. The IRS requires clear documentation for home office deductions. Keep floor plans or measurements of your office space, receipts for utility bills, repairs, and home-related expenses, yearly mortgage interest or rental statements. Common mistakes to avoid claiming personal living areas as office space. Forgetting to prorate shared expenses like utilities. Switching between deduction methods incorrectly. Once you use actual expenses for a property, you must continue unless rules allow otherwise. Final thoughts. The home office deduction can provide significant tax savings for business owners who qualify. Choosing between the simplified method and the regular method depends on your office size and expenses. At SK Tax Associates, we help business owners maximize deductions while staying compliant with IRS rules. If you're unsure which method works best, consulting a tax professional can save time, money, and stress during tax season.